How often do we see people make millions by betting on a stock that seemed to go nowhere, only to soar a few days or even hours later? If it happens once, it could be a fluke, but what if it happens 3 times over the span of a month? This is what happened this month when the biotech industry was shaken up by a few traders investing a huge amount of money in specific stocks for no apparent reason. Nobody thought these stocks were going to move up or down. But these traders were surprisingly right on the money, banking %700 returns or more in a very short amount of time. Did they see something nobody else did, or was it a coincidence? More importantly, can we replicate what they did? Let's find out. Welcome back to PST Markets. Up until November 29th, nothing of any significance was happening to ImmunoGen stock, and nobody had any reason to think it would soar or nosedive anytime soon. However, a trader mysteriously decided to buy 5,700 call options with a strike price of $21 for ImmunoGen, investing $500,000. The options were almost 31% out of the money at this strike price. Who in their right mind would bet with such a huge amount of money on a stock that had no upcoming catalysts and had been trading sideways for a few months at that point, for no apparent reason? Well, it seems like insane risks pay off sometimes, because on November 30th, only one day later, ImmunoGen was acquired by AbbVie, which caused its stock to rally by 82%. As a result, the mysterious trader turned his initial $500,000 investment into an astounding $3.5 million. If you were impressed by this trade, wait until you hear the rest, because as it turns out, this was only the beginning of a trend. Less than a week later, on December 4th, AbbVie acquired another company, Cerevel Therapeutics Holdings, but surprisingly, just 2 days before the acquisition was announced, a few traders had bought big amounts of Cerevel calls with strike prices of $40, with the stock at the time trading at only $26, or 65% out of the money. Following the acquisition announcement, the stock price of Cerevel Therapeutics jumped to $45, very close to the strike prices, netting those lucky traders millions in the process. And last but not least, during the same week, someone bought $100,000 worth of EYPT calls that were 56% OTM. And as I'm sure you guessed by now, EYPT announced a new cutting-edge treatment shortly after buying those calls, causing the stock to take off like a rocket. The volume traded increased dramatically, and the stock jumped from $6 to as high as $24, a 200% increase that turned that $100,000 into $1 million. So now we are left with the question, are the best traders in the world trading only biotech stocks now, or is there a better explanation for these sudden successes? Given the timing, the lack of catalysts, and the shockingly on-point strike price, we could very well be looking at insider trading cases. And if you don't know what that is, an insider is somebody who works at a company and has privileged access to information regarding its future prospects. Insider trading happens when insiders leak this information to a select few to encourage them to trade the company's stock based on this secret information. The CEO of a big corporation, for example, could tell a friend to invest in the company because it's going to strike a huge deal that could drive its stock up, even before that deal is publicly announced. Insider trading is illegal because it obviously gives an unfair advantage to insiders who can trade based on information nobody else can have. But since when has that ever stopped Wall Street? But why were all these trades in the biotech sector? Well, to begin with, the biotech sector is highly susceptible to insider trading. This is because biotech stocks mostly move on binary events like FDA approval, research results, or acquisitions. The difference between yes and no approvals and regulatory decisions can mean hundreds of millions of dollars. So people who know what's going to happen beforehand can profit from the big moves these catalysts usually trigger. It also means that a lot of people inside and outside the company are privy to this information, making it much easier to leak to the public. Given this, it's unsurprising that plenty of insider trading has happened in the past within the biotech sector. For example, in 2021, Matthew Panuwa was accused of insider trading. 5 years earlier, he learned that his company, Medivation, was going to be acquired, so he bought stock in a competitor since its stock was expected to rise on the news. More recently, the husband of an Array BioPharma employee was accused of making $90,000 before Pfizer bought the company. It was thought that he must have known that Pfizer would buy the company beforehand, so he bought stock in Array, expecting it to rise after the deal was announced. A much earlier example from 2001 was when the FDA didn't approve a new drug by mClone. Because he knew that the stock price would fall when news of the rejection got out, the CEO of mClone, Samuel Wakesel, attempted to sell his stock and told his friends and family to do likewise. What we have here, then, isn't unprecedented. insider trading has been a not-so-uncommon event in the biotech industry. So what about the current 3 cases? Well, in the cases connected with AbbVie, traders entered call positions before an acquisition by AbbVie was announced. They had strike prices very close to the prices offered by AbbVie and had expiration dates after the dates on which the acquisitions were announced. This highly suggests that someone inside AbbVie is telling traders that acquisitions are going to happen, and so those traders bought calls knowing that the stock will rise. The same goes for EYPT. In that case too, a good explanation could be that an insider had information that a new treatment would be announced and leaked to their close circle. You're probably wondering at this point how this could be relevant to you as a retail trader, as you surely can't get the information insiders have, and even if you could, it would be illegal anyway. Luckily, however, retail traders can still swim in the same current as traders with insider information. The trick is just closely to follow the market and the option flow of trades. If you notice that there's a sudden trading activity involving huge amounts of money that seemingly has no explanation, that would be your first cue. Do your research. If you make sure that there's really no indication that this stock is going to move, then it might be that some traders have access to insider information and are acting accordingly. If an option they bought were way out of the money, that would be another confirmation, and your last cue is to check the option's expiration date. If it's too soon, then it's safe to say someone is expecting something major to unfold soon, or why bet big with the high risk of time decay? Keeping an eye on the options flow then is pretty important since insider trades happen very quickly, shortly before the stock rises. Taking Cerevel Therapeutics as a case study, it's likely that a few traders knew something was up because the volume and price increased just before the catalyst occurred. This might mean that traders had learned the lesson of the ImmunoGen case. If this were indeed the case, it would be a good example of how analyzing past trades is crucial for picking the right stocks. To track trends and get alerts for suspicious trading activity, you could use Unusual Whales, which is a very user-friendly tool that allows you to monitor the market and set up alerts conveniently. However, and most importantly, use your best judgment and don't be too hasty. Insider trading is just an indicator at the end of the day. It sure is a big sign that something's going to happen, but all insiders may know that whatever event they're expecting may not end up happening. It could even be that the trading activity is just based on someone's hunch or willingness to take risks after all. So don't invest all your money because of what you believe to be insider activity, and always diversify your investment portfolio. Well, that's all for now. Tell us what you think about the unusual trade moves that have been happening around the biotech sector, especially AbbVie. Do you think they're because of insider information? Have you heard of anything similar going on right now? And if you enjoyed this video, don't forget to leave a like and subscribe to our channel to get more videos like this one. Your support helps us grow.